Good afternoon, everyone. Welcome back to another episode of Charts and Chill Unscripted. Now, I know it's the holiday weekend. I hope you guys have enjoyed your weekend. I've had a pretty wholesome weekend personally. Uh, Pretty much yesterday, I spontaneously went to a pick your own farm, and they had pick your own edamame, they had pick your own potatoes, and a whole bunch of different tomatoes and peppers as well. It's pretty nice, honestly. The weather was great too. Weather's great today as well, and that's pretty much what I've done so far. But I know this weekend has been an absolute wreck for festivals. Burning Man had a storm or just torrential rain that completely ruined the event so far, and people are stuck there. It's very muddy. You can't get in, you can't get out. It's crazy. And Izu, for those who are on East Coast, like me, they had a shit show on Friday where they canceled 2 hours before doors opened, and then yesterday they had delays and people weren't able to get in on will call, and it's crazy. What a weekend, huh? What a weekend. Kind of glad I didn't go to Izu this year. This actually would have been my decade anniversary of going there, so this is actually the first year I haven't gone to Izu in 10 years. Crazy. But regardless, today's stream I'm trying to keep it short. I know everyone has things to do this weekend. I have some errands to run later as well. So want to keep this short and we'll just focus on the weekly plan for this week. We'll do a quick weekly recap and then we'll end it there. All right. Gonna start off by going over the indices with ES and SPX. If you guys, again, if you guys do like my content, please like the video, subscribe, and share. And I'd be more than happy to put out more content like this. I told you guys previously that my goal was to do at least once a week and then eventually do 2 to 3. I think we're doing 2 a week now. You know, a midweek recap, and then we're doing a weekend prep for the upcoming week. So we're on track with that. All right. Another thing is, if you guys would like to join our community, I am running a sale. You can check out the link below, and you can use promo code Burning Man for 20% off your first month. We do a lot more than just what you guys see within this content on YouTube. We have dozens of hours of educational video that I've done in the past. We have a great community. There's a lot of valuable resources in this community. So if you guys are interested in joining, feel free to use the promo code. Only works for new members, and the sale will end on Tuesday night, right before midnight. All right, cool. Let's get into it. So first thing I want to look at with you guys is ES and NQ. Last week I provided you guys levels of 44.65 for upside pivot and 43.30 for a downside pivot. You guys know I've mentioned in the weekly plan that 43.30 is a major pivotal level for downside. So unless we break that, trend is still up. Okay, once we break that, we can likely see about a 100-point move down to downside. And as I've repeated in the past as well, even if we see another retrace down into 4200, 4100, for example, trend is still up. We are still in a macro bull trend at the moment, and that will just be a higher low printed on a macro time frame. I also did mention the past 2 weeks. Ever since 2 to 3 weeks ago, I said market is likely going to bounce and rally. And even last week during the weekly plan, I said we're likely going to see continuation into the holiday and possibly even after the holiday. And we've done exactly that this entire week. So once we got the break of 44.65, which is right here, 44.65 on Tuesday, we have rallied almost another 100 points into the end of week. Okay. So for now, for this week, we are looking at 45.60 as your upside pivot. And then for downside pivot, we're looking at 44.93. Okay. So this is a previous Friday high that we need to hold above. And then we have the 45.60 50 level here. And if we zoom out a bit, you can see why this 45.60 level is so key. Okay. Based off this high from July, test number one, test number one, test number two, test number 3, 4, 5, 6, 7, 8. Finally a break and a confirmed move to the downside. Then we retested it now as resistance. And we did a bearish retest right on the level, continue to the downside, providing about a 200-point move off the retest of this level. So you guys can see how this becomes a key level for upside now. Same way I showed you guys the example on SPX last week when we discussed 45.27.76 and we discussed 44.59.17. Okay? For SPX, the pivot level for upside last week was 44.59.17. Okay? So now you can see what happened right after we broke 44.59.17 on Tuesday. We ran for another 70, 80 points into the highs. So this is how you can utilize the pivots, all right? And now that we're discussing that, you'll be able to see the importance of where I came up with the 45.27 level and how we've reacted since. I believe I discussed this during the midweek update, and I basically gave you guys these two potential scenarios in which we break above this supply zone and above the level, and we basically head towards the gap fill. Or scenario 2 is that we continue to reject this and then we see some downside, which is basically what we saw on Friday after NFP. Okay, so based on the number of touches, you can see how strong this level is, right? The more reactions at a level, the stronger the level becomes. Okay, so this is very key in terms of seeing how SNR flip occurs. Initially, we broke out. Well, initially, this was resistance. Once we broke out, it became support. Bounce off of it once, bounce off of it twice. Then we finally broke support on the third test, and now we use it as resistance. Rejected, rejected. Okay, now we're right back into the same level. All right, and again, I'm still sticking with my stance in regards to potential continuation into more upside. I would definitely like to see this gap fill tested into 45.74 and higher. It is possible that we do retest our checkmate level, which is this 45.98, 53, which again was the level that we ended up shorting right at the same time the BOJ news came out that day. So this can be tested again. I believe this week is less data heavy than last week as well. So we shouldn't expect too much volatility. We do have a lot of Fed speakers on Thursday. That's pretty much it. I mean, nothing... we have jobless claims as well on Thursday. But it is a shorter week, so I'm not really expecting too much volatility for this week. Likely will come towards the next FOMC. Now, if we take a look at NQ, I'm going to use this on a cleaner chart. The same projections that I gave you guys previously in terms of this downside, possibly timing was wrong. This was based on the potential Jackson Hole move, but we've seen higher. We've also broke back above this key zone here, the supply zone. Okay, or resistance, however you want to coin it. So long as we hold above this box, we can likely see higher, and we're not that far from all-time high on the indices either. SPX is at, I believe, only about 7% from all-time high. NQ is getting pretty close as well. Yeah, we're about a little over 1,000 points from all-time high. Just about the same, 6-7% or so, if my math is correct. So keep an eye on these. And this is what I'll be watching for, futures trades as well. You guys have my NQ levels here. So if we actually take a look at the chart with levels, we'll need to at least see a break of 15,606 next week to see higher into 563, or sorry, 663 and 700 plus. Okay. But I did mention midweek that in chat that we are at a pivotal point for NQ, especially for bulls. So essentially, we have 3 points of confluence midweek, which we needed to watch in terms of finding continuation into upside, which is exactly what we got. We have this macro trendline resistance here. We have a bear flag that can be invalidated by a breakout above it. 2 points of confluence meeting here, right? Inflection points. And then we have key levels that we were trying to break, which is the 437 and 468 into 500. Okay, so this area has been pretty key. On a shorter time frame, on short term, we need to see this break back above. Otherwise, this area can actually, if I just extend this out a bit, this area here can act as resistance for the upcoming week. Okay. So we need to break back above this box to retest the highs. Otherwise, we can likely retest the 400 level again. But aside from that, Trend is still up. Coming to the day with no bias. I don't get married to price. I trade whatever's in front of me. Okay. Even if I'm bullish on the week, doesn't mean I come in to every single day trying to buy calls, even if the trend is telling me it's down for the day. Okay, that's a key thing to remember. So we can get into the individual names that I've put together for the week. And you guys have the details in the plan. Okay. One thing I do want to mention is with the weekly watch lists, I've said this many times before, but these weekly watch lists are curated, especially on individual names, are curated for you guys to execute without having to wait for me. Everything is laid out. Your specific entries, your invalidation points, the specific contracts that you should be taking, the targets, and even a brief analysis on why I've added it to the watch list. Now, if you go into our previous watch list, you'll see we have a very high win rate with them. And there's a reason for that, because I spend hours on a weekend prepping for them, and they're very directional trades, right? There's no how I usually do daily pivots. It's one directional moves that I'm looking for. And some trades may take longer to play out than others. So it doesn't necessarily mean that after 1 week, you should completely ignore those trades. Again, I like to add new opportunities every single week because market changes every week. Okay. So for this week, because it's a short week, I have a shorter watch list. One of the first things I'm watching is actually Airbnb. We can take a look at Airbnb here. Airbnb looks great. I have discussed Airbnb in the past before, and long as Airbnb holds above this 124, actually it's not on this chart. Where is it? Oh, here it is. Long as Airbnb holds above the 124.28 level, which most of you guys in my community know that this is a key level that I've been discussing for months on Airbnb. Long as it holds above this bear flag can also be invalidated, and we're still trending higher, right? You have your initial low here. You have a higher low here. You have a higher low here. Couple that with higher highs, okay? We are now trading within this huge channel, which could still turn out to be a bear flag, but at this point, looks great for long-term plays and even, swings maybe a month or two out. So entries here, as long as this level holds, I'm bullish. Once we break down below this, we're likely going to break this bear flag and retest this 113 level. Aside from that, bullish on Airbnb. Also watching Moderna. So you guys know I've kind of been on the COVID names since PFE a couple weeks ago. PFE is taking it a little longer than I expected to break out, but I do like Moderna as well, which is the reason why I'm adding it to the watch list this week. We did watch this for day trades throughout the week, and as I've mentioned this past week as well, we are at a key area here. And for full confirmation on Moderna to break back above, we need to reclaim this range. This is a huge range with a lot of resistance being built now over the past year and a half or so. However, on shorter time frames, still looks pretty good. We didn't really get the breakout on Friday, on Wednesday when we were watching it, but trend is still intact. We are now building a higher low off this structure here. Okay. So long as this area holds and we continue to trend up, we can likely see another test of 117. Above this 117, 118 area is really what I want to watch for a move into 120s again. Now, the other thing I wanted to look at with you guys in terms of Moderna is the monthly charts. The monthly chart looks extremely bullish now based on the August close. We have a hammer that printed to close out the month. And look at the volume that's showing here. This is a very high volume hammer close. Okay? And this should suggest reversal in price. So this is what I'm watching. Again, ideally we want to be able to reclaim the key levels above 117, 118 in order to see 120s. But I do like, structurally speaking, I really do like the lower time frames as well for a move back up there. for a retest. And even then, you're looking at about a 5-point move from this range. You can also spot this key support area here. Okay. Lower time frame structure that we need to hold. So long as this holds, we can see higher once again. The last one I wanted to look at is Bank of America. I've been watching banks for quite some time and kind of waiting for a dip buy on them. Seasonally speaking, they do pretty well in Q4. But if we focus on BAC here, we are sitting at a very key range, historically speaking, on BAC. So long as this holds, we can likely see a retest of the local highs. One other thing to note is that there is possibility of risk. Our risk right now is essentially this bear flag that can potentially play out still from the lows of March, connecting into the lows of May and extending this trend line out. However, on a macro level, we have not only bounced on the GP from the COVID low, okay? We have not only bounced on the GP from the COVID low, we have also bounced on the GP from this recent rally. So if you actually look at it from the lows of March into the recent highs of July, we're actually bouncing right off the GP once again. So that's confluent data point number one. Actually, number two now. The macro GP is confluent data point number one. Short-term GP here, based off the recent rally here from swing low to swing high, is confluent data point number two. Number three is a breakout of this trend line. If I actually extend this out, we recently got a breakout of this pennant here back in July. And then now we've just retested it once again and bounced. So this lining up with the GP, lining up with the macro GP, and also lining up with the bear flag test, which we pretty much tested right down here and bounced as well. You now have about 3 to 4 confluent data points that can provide you with a stronger analysis of a potential bounce back on Bank of America. And this is what I like about the chart. Okay. We also have a potential bull flag that's forming here that can take quite some time to play out. But for short term, I'm looking at it retest of 31 at least. And then we go from there. And that's about it. Other than that, the past week, the watch list and the weekly plans that I've provided you guys have played out pretty well. And I've been providing you guys with midweek updates via this Chart and Chill unscripted stream. And I think it's been good that we've been doing that because not only are we seeing how the plans play out, but we're also prepping for Thursdays and Fridays. All right. Again, if you guys like my content, please like and subscribe. And we are running a promo code sale for this weekend. It will end Tuesday night. If you guys are interested in joining our community and joining Zenith, I am providing a 20% discount. So you can use code BirdingMan and get your first month discounted. All right. Other than that, if you guys don't have any other questions, I'm not looking to do any chart requests today. I do want to try to keep this stream short so everyone can enjoy the weekend. If you guys have any questions about what I've gone over, this is your time to ask now. Otherwise, I will end it. Any questions? And feel free to share these videos with anyone who is in obviously in trading. This is going to be uploaded automatically to the channel once I conclude the stream. So if anyone missed it, you can always catch it. Cool. Awesome, guys. Thank you guys for joining and taking time out of your weekend. And I will see you guys on Tuesday.